Welcome back to Explain the Charts. Today we'll be looking at the EURUSD, the euro against the US dollar, and we'll be analyzing both the news and the chart data to give you a complete picture of where this market is likely headed. Recent headlines suggest the EURUSD is facing pressure as the US dollar strengthens following the release of US inflation data. The data cooled expectations for an aggressive Federal Reserve rate cut, leading to a stronger USD and a weakening euro. However, the euro is still likely to see some gains in the coming months, but only if the Eurozone economy shows signs of recovery. Another factor to consider is the upcoming US presidential election, which could have significant implications for the EURUSD. A potential second term for Donald Trump might lead to higher inflationary pressures due to tariffs and tensions with China, which could weigh on the euro. Let's take a look at the charts to see if they align with these news events. Here we are on the daily EURUSD chart, where we can see a clear downtrend over the past few weeks. The price has been steadily declining, and we're currently testing the 1.1000 level, which is a major psychological support level. A break below this level could lead to further declines, potentially towards the 1.0720 area. However, there are some signs that the downtrend might be losing momentum. The recent bounce-off of the 1.1000 level suggests that buyers are stepping in at lower prices. The Relative Strength Index, RSI, is also showing signs of oversold conditions, which can lead to a potential reversal. If the price can break above the 1.1000 level, it could signal a shift in sentiment and a potential bullish trend. However, it's important to note that the daily chart is still showing a clear downtrend, so any bullish signals need to be confirmed by the hourly chart. Let's switch over to the hourly chart to get a more detailed look at the current price action. Here we are on the hourly EURUSD chart, and we can see a bit more detail in the recent price action. The price has been consolidating around the 1.1000 level, which is consistent with the daily chart's testing of the support level. The RSI is also showing signs of oversold conditions, which adds to the possibility of a short-term reversal. However, the hourly chart is still showing a downtrend, with the price below the 50-hour moving average, which is a key resistance level. A break above the 50-hour moving average would be a strong bullish signal, potentially leading to a move towards the 1.1100 area. On the other hand, a break below the 1.1000 level would signal a continuation of the downtrend and could lead to a move towards the 1.0950 area. The hourly chart is definitely showing a more volatile environment than the daily chart, with price action changing more quickly. Let's take a closer look at the hourly chart to examine a particular range of candles. Let's narrow down on the candles between August 22, 2024, 1400 hours Universal Time Coordinated, and August 22, 2024, 2100 hours Universal Time Coordinated. Within this range, we see a distinct pullback from a high of 1.1119, which shows a short-term resistance level. This pullback is likely due to the news events discussed earlier, with the US dollar gaining strength. This pattern highlights the importance of staying on top of current events and economic data when trading EURUSD, as these factors can significantly impact price action. While there's a possibility of a short-term rebound, the hourly chart's overall trend still suggests the potential for further downward pressure. We can see a continued decline from the high of 1.1119, which can be considered a short-term resistance level. Let's switch back to the daily chart to get a broader perspective on the current situation. Looking back at the daily chart, we can see a strong correlation between the recent price action and the news events. The EURUSD has been struggling to regain momentum as the US dollar strengthens. The daily chart's downtrend is consistent with the current economic data and market sentiment. However, the potential for a reversal is still there, especially if the price breaks above the 1.1000 level. It's important to remember that the daily chart provides a longer-term perspective, while the hourly chart offers a more granular view of the current price action. To make the most informed trading decisions, it's essential to combine the insights from both time frames. Now, let's look at the 15-minute chart to get an even closer look at the price action. The 15-minute chart shows a lot of short-term volatility with rapid price fluctuations. While this can be beneficial for scalping strategies, it also increases the risk for traders who are holding positions for longer periods. We can see a recent period of consolidation, suggesting that the market is waiting for a catalyst to break out. It's essential to monitor the 15-minute chart closely for any signs of breakout, as it can offer valuable insights into the short-term direction of the EURUSD. However, for longer-term trading, the daily and hourly charts provide a more reliable picture of the overall trend. Ultimately, it's up to each trader to determine which timeframes best suit their trading style and risk tolerance. Let's recap the key price levels to watch for in the coming days. On the daily chart, the 1.1000 level is a major support level that needs to be broken for the downtrend to continue. A break above the 1.1000 level could signal a potential bullish trend and a move towards the 1.1200 area. On the hourly chart, the 50-hour moving average is a key resistance level. A break above the 50-hour moving average would be a strong bullish signal, potentially leading to a move towards the 1.1100 area. On the other hand, a break below the 1.1000 level on the hourly chart would signal a continuation of the downtrend. It's important to monitor both the daily and hourly charts closely for any signs of breakout. Remember, trading involves risk, and it's crucial to develop a sound trading plan and manage your risk effectively. That wraps up our EURUSD analysis for today. Thanks for joining us on Explain the Charts, and we'll see you in the next video.